everyone, this is Abhijit Chatterjee recording our weekly session for Charts are Fun. This is for the week of February 2nd, recording this on Sunday, February 8th. This week, a lot has happened. The beginning part of the week, we had a massive collapse in the Bitcoin and the cryptos broadly, and also the software stocks. Cryptos just had huge, selling going all across from the October peak. And this week almost hit a capitulation point. We'll kind of share some charts and thoughts on where the crypto market could be headed in the near term. We also will look at the software stocks that absolutely took a huge tank because of Anthropic's co-work, their agentic model that they released, which basically integrates the future of work, bringing in the idea of plugins into desktop application environments, and then for you to be able to do work that in the past people used to pay, big software companies, whether it's LegalZoom or whether it's many other business softwares that have effectively been impacted, Thomson Reuters, for example, and so on. So those many of the software stocks, the SaaS, call it the software as a service stocks, have all taken a massive dump, and we'll look at that. But then the big thing that happened on Friday was a 1,200 point move in the Dow, and Dow celebrated a 50,000 milestone. We'll look at the chart of Dow. We'll show why we think there is some upside left in the Dow. It kind of broke out of a very key technical pattern that has some more upside. And the key theme that's been going on in the market in January and into early part of February is old economy stocks are roaring back. And that's what helped the old economy index Dow kind of scale and massively break out. And in this case, taking out that 50,000 psychological level. We'll look at some warning signs though, and we have in the past talked about the sharp pullback of gold and silver, which repeats from what happened in 2011 and 1980, the two previous time periods when we had these parabolic climbs, parabolic vertical climbs in gold and silver, and especially the gold and silver ratio tanking. And then when that pullback comes, usually it follows with a 20% or so market correction. So we'll show some warning signs today, explain why we think there's potentially possibility of QQQ, the leading technology-driven index, to kind of have a correction coming. And more importantly, we look at S&P 500 in terms of its core sector components, and we'll show you some of the top, starting with the technology sector, which is 30 to 35% of that S&P 500, then looking at the next big sector, the financials, then from there the communication services, the discretionary, and healthcare, and the industrials being the next couple. So we'll look at the sector charts, and these are all long-term views on the charts, and share some warning signs where we think the market is setting up for a 20% plus or more correction in the next few months. So just caution is warranted, is our point. Just upfront, disclaimer, legal disclaimer, we do not provide investment advice. We are not a registered investment advisor. Our ideas here are primarily to share chart patterns, give you some insights on charts, and show you why charts are fun, why these insights are incredibly valuable in making your decisions towards your investments. Our Substack site, whenever we publish these blogs, they come out in the mornings usually. If you subscribe with your email in Substack, they're free. You will get those emails as soon as the blogs come out around 7 a.m. Our YouTube site is also Charts Are Fun. We hugely appreciate the new subscribers. We've recently crossed the 1,000 subscriber mark. Hugely appreciate the subscription. Appreciate you liking. If you like the videos, hit the like button. That means a lot to us, so that we can generate even more valuable content to you folks. And then if you could subscribe to the channel for those that have not subscribed, we really appreciate it. So moving right into a key marker or a key pattern that we have talked last week in terms of diversifying out of precious metals, gold and silver, into the digital gold, or as the US has been now actively looking towards, call it a regulation coming out that will help provide more clarity into how should the digital currency in terms of the digital instruments such as cryptos be treated. There's always been an argument, should these be like traditional securities like any other securities, or should they be treated as commodities? So this crypto market structure bill, which did pass the Senate, is now going to go through the House, and then President Trump will do a signature, is key to providing amongst $3 trillion of money sitting in the sidelines from the big banks. The idea here is really to modernize the transaction processing backbone of these banking system. It's very age old over the time that the banks have been running it for over 100 years. And this new digital backbone backed by blockchain technology is going to completely transform the way transaction processing happens. Be 24/7, provide very, very strong, visibility and transparency to what's going on in that transaction system, and provide instantaneous transaction processing, which is what the cryptos are known for. So, the right into the chart, a monthly chart of Bitcoin, we can see a rising channel joining the peak from 2021 at 69,000 all the way to what we saw recently at 126,000 on October of 2025. If you join that trend line and take a parallel line to that and join the lows from the 16,000 low from November 2020, October to November 2022, to the 24,900 in 2023, to the recent low that we saw this week on Thursday. What did we get? We get a very sharp drop from 126 to 60. That's over a 52% drop in a very rapid. This is a monthly chart. Every candle is a month. So we see 1, 2, 3, 4, 1, 2, 3, 4, 5. Within a span of 5 months, we had a drop from the top to the bottom end of the channel. Usually, these sharp drops are then preceded by some form of a snapback rally. We should look at what the potential for that is. But key is having tested a key level with respect to the bottom end of the channel, having pulled back sharply, and now right in time for what happened was in that span of 3 days, starting from Thursday's bottom to what's today at Sunday, we are at back above 71,000. So from 60,000 rallying back to 71,000, the highs, we shall see where it ends the week. It might end later today by like around 7 p.m. is when the Bitcoin ends for the week. If it is reclaiming 72,000, we're talking about a 20% reversal from the lows of the week. That's a sharp move in a span of 3 days. And it's interesting how people are saying that money might have flown through US adding to their Bitcoin in their strategic reserve. That's what Jim Cramer said. That was out in the news over the Friday onwards. We shall see, but the news comes out later of what could have happened. But we know that there is huge optimism now. There's an urgency from Scott Bessent, from the US senators who are driving, Senator Loomis and others who are driving this crypto market structure bill. That urgency to get that approved and passed is going to really define US as the leader in digital currency, and it's going to have a huge impact to money diversify out of precious metals into cryptos. And our call last week looking to diversify out of precious metals into cryptos stand, and we love the way the capitulation low got sealed on Thursday and the way the reversal happened. That said, another key milestone happened on the Dow Jones Industrial Average. This is a 125 or more, 130-year-old index composed by and created by Charles Dow. This index has 30 key stocks, many of the Caterpillars, Goldman Sachs, JP Morgan. You're talking about in the new age companies, Nvidia has and Amazon have been added recently to this index, so they are definitely there. But if you really look at old technology or like IBM or old economy stocks, they're very much even talk about the consumer parameter of the consumer, whether it's the McDonald's is in it and Walmart, which is the behemoth of the retail and the consumer space. They're all in that index, and that crossed 50,000. So 50,000 was taken out. And if we look at this technical pattern on the weekly chart of the Dow Jones Industrial Index, we can see a key ascending triangle breakout. So that 45,000 was horizontal resistance, climbing patterns of higher lows. That breakout from 36.6 to 45 is 8,400. at 8,400 to 45, that measures 53,400. That's the target. And we just took out 50,000 and closed at 50,115. So talking about another 3,000 points or so. And, just the week itself, look at the climb of 1,223 points, 2.5% upside for the week. This is for the week, and we can see a very bullish candle. This momentum, we believe, does continue, and there's a good chance in the weeks ahead the Dow Jones Industrial could go take out that target at 53,400. What's helping this is also a very well-known thing called Dow Theory, where both the transports and the Dow Jones Industrial breaks out to higher highs. And we can see this in the Dow Jones Industrial Index. And let's look at the Transportation Index. That broke out of a cup and handle, beautiful cup and handle between 12,400 to 16,400. That measures to 20,400, 20,500. A massive move, 8.7% for the week. That's what the transport did. The airlines are screaming like the UPS, the FedEx, they're all absolutely screaming higher. And all that caused an 8.7% upside move in the transports. Old economy is coming back. And as a result, this big move happened. Now, if you extend this out to a longer term monthly chart of the transportation index, we can see that back in the 2018 peak, it had kind of broken out of a broadening pattern. And then from there, the upside from 6,500 to somewhere around, say, 12,000 was 6,000 points added to 12,000, 18,000. So it met that target. From there, it was kind of range bound. This is called a rectangle pattern over 2021 through 2026, 5-year rectangle pattern that it just broke out. This pattern, by the way, on the breakout measures to a level from 11,900 to 17,900, 6,000 points, added to 17,900, 23,900. So 23,900 is potentially where the transports could climb if this bullish old economy stocks keep roaring higher, and that could be the upside towards which the transports are headed. So that's a possibility. Right now, the near-term target, it's at 19,900, is still in that cup and handle target at 20,400. We can see RSI is overbought, MACD is overbought, so there could be a pullback after that near-term 20,500 cup and handle target is met. But a longer-term view, though, looks very bullish on the transports, and we got to see if this is just a breakout that just fizzles out, or it's like the breakout that we saw into 2020. Now, this came from the roaring recovery from the COVID's massive liquidity injected caused that climb. If rates are lowered, if there is investments coming in from the infrastructures and the aspects of economy kind of powering higher, then the transports could continue the momentum higher. That's to be seen. But right now, this is a very solid long-term bullish signal in terms of the breakout that the transport saw. So Dow theory enthusiasts are saying that transports breaking higher is leading the economy higher, and then the economy indicates upside in the stock market. That's potentially possible. We do think bullishly about the US economy and about the US markets, but now the next segment we're going to show you some of the key concerns that are shaping up in the AI-driven, technology-driven stocks. A similar kind of a rectangle range has formed in the QQQ, the Nasdaq 100 ETF daily chart. Now, this shows a double top at 636 tested twice, 636 in October, late October, and a 636 tested in late January. In that span, when the 636 double top was tested, look at RSI, lower high. Pattern of lower highs in RSI means negative divergence, means stopping sign. That double top from a 636 to a breakdown below 580, 580 to 636, you're talking about 56 points. 56 from 580 takes us to 524, is potentially where this rectangle range breakdown could drop. However, if this recovers and is able to take out to higher highs in RSI and break above this rectangle, like we saw with the transportation, that is significant upside. From 580 to 636 is again that $56 added to 636. That takes us to 692 is the upside if QQQ can break higher. So right now it's in no man's land. It's leaning on bearish, and we'll give other indicators where we think the breakdown seems more possible, but bulls will still point to a potential breakout on the QQQ to run to the 692 towards the 700 once it can break the double top pattern of 636. Now, QQQ long-term chart, and this is a monthly chart, every candle is a month, is showing some similarities with respect to what we saw into late 2021 into 2022. Look at, and we've drawn to that rectangle, like kind of rectangle rubber band around that time period, and we can see that when the price dropped, RSI crossed below 70. It was overbought the last several months at a time, and then it broke below 70 and started coming down. MACD histogram on the MACD signal indicators also had a bearish cross. Similar pattern seems to be shaping up. RSI is on the verge of crossing below 70. MACD is on the verge of having a bearish cross. Both the signal line going below the red line, and so the black curve belonging to the red curve, and the histogram getting ready to dip below zero, like what happened in 2021 into 22. The other thing that's key is to watch the percent the price is above the rising 200 period moving average. Look at how far it has diverged. In the 2021 peak, it had diverged almost as much as 200% above the 200. It didn't go as high as 200, it came almost to 150, and now it's hovering, already started declining the percent above the PPO at 140% right now. That's an extreme stretch above the 200 period. We can see how far it is stretched from the 200 period. That means extreme overbought. Every few time periods, we get that reset and it comes back and tests that rising 50 period moving average. We got that into 2022, and a similar kind of pattern could shape up in 2026. So that's what we're cautioning. And if it does pull back that sharp, the downside could even go. We talked about a 520 for target if QQQ breaks below that 580. But if you look at the pullback to test that rising 50 period moving average, that's 423. And it is climbing. So by the time the pullback happens for the next several months, maybe it could come closer towards the 450 level or so. We saw in the past 445, 450 from where it broke higher. But that pullback to test that rising 50 period moving average, like what happened in 2022, cannot be ruled out in 2026. And if we have looked back and in our previous video talked about the potential for a 2026 20% correction correlating to what happened in the previous commodity peaks in 2011 and 1980, that also gels with what we're seeing in the early signs in the QQQ long-term monthly chart. Another key indicator of market breadth, the bullish market breadth, is called the BPNDX. NDX is the NASDAQ 100 index. BP is the bullish percent, as in what percent of the 100 stocks that are in the NASDAQ 100 index have bullish looking point and figure charts. That number is steadily printing lower highs. At 85, recently printed a high in the low 60s to now it's threatening to break down. While that's happening, look at the trend line joining the rising sets of lows in the NDX index. Looked at, it broke below that trend line, like exactly what happened in 2021 into 2022. As that series of lower highs happen in the BPNDX and then the breakdown happened, the same pattern is repeating now into 2026. So this period, this series of lower highs is also happening, a series of lower highs. That breakdown happened into 2022 to lower lows in the BPNDX. We could be gearing up to break in the next few months below that 30. A key indicator we're going to talk next is the software stocks. Look at what the software stocks are telling us. They already corrected ahead of semiconductors and the other technology stocks. Look at the correction, how sharp it has been. From 118, it also had a double top at 118. It pulled back and tested 79. It actually met its target. We presented that in our weekly blog. Go check it out in our Substack, chartsarefun.substack.com. But that breakdown from 118 towards that 79, that was a sharp breakdown. Almost, you're talking about close to 30, 31% or more from a pullback that we already got. That breakdown effectively could be repeated in other technology stocks. So it broke down and tested that 50 period moving average. And look at how it had also diverged a lot higher, over 200% in the 2021 peak. This time it went about to the 100 and little bit below 150, and from there it is already now 53%. It has come down closer towards its rising 200 period moving average. And look at when this top happened: higher highs, lower high in RSI, something that's a worrisome pattern. And if you look at the QQQ's chart as well, look at the RSI printing lower highs as it's kind of getting ready for a bearish cross. So IGV, if you then look into semiconductors, It's a screaming, screaming overbought from where we see at the semiconductors. What we saw in IGV, that breakdown to test its rising 50 period, what if it happens to semiconductors? We could be having significantly pull back all the way down to 200 from above 420 where it peaked recently. So that's a concern. Look at how far it has diverged from its 200 period moving average. It's over 267% is what this has done. So that could mean that that sharp pullback in semiconductor is going to bring the QQQ index down, because semiconductors are heavily weighted looking at the $1 trillion plus stocks, whether it's Nvidia in the semiconductor index, whether it's you know, the other key semiconductor stocks that could effectively bring the market down, something for us to be very cautious about. Now, from there, if you look at the S&P 500, S&P 500, we can see the MACD histogram has started to dip. We can see lower highs in the MACD histogram. The signal line started to curve. The black to now curve and break below the red, like what we happened in 2022. A similar kind of pullback, in this case, shows all the way from the 7,000 that it recently tested all the way towards the 5110. So 5100, 5110 is where 5119 is where we saw in the 2024 kind of a pullback in early part of 2024. But that's where the 50 period moving average is climbing, and that could mean like a 30% or so pullback from 7,000. You're talking about 5,100. That's close to almost 2,000 points. So it's a little less than 30%, but that's perhaps what a sharp pullback in S&P could lead us to if it has to come test that rising 50 period moving average. Another key signal that we're very worried about is what happened in 2021-22 is repeating, is the ratio of the S&P 500 ETF to the QQQ. That, as we can see, broke out of a descending trend line joining the peaks and then significantly climbed. That pattern is repeating again. So you can see the peak set of falling peaks broke above it, and from there just started climbing. We broke down from like when we were coming down as the market was rallying into 2025 into the 2026. That series of lower peaks, trend line has broken higher, and now we can see it climbing. This climbing and picking up momentum, like what happened in 2022, is the repeat of a market correction. When market corrects, the technology usually leads the correction. As a result, the ratio of S&P SPY to QQQ starts outperforming. The ratio starts climbing. And look at how sharp that climb can be when that sell-off happens. Looking at how far it has started climbing, we expect that trend to continue and to be cautious about the technology stocks. Now with that, we're going to talk about the sectors, because S&P 500 at the end has 11 sectors. But if you look at the core sectors, and this is from the macro micro site, but if you look at the weights of the sectors, and this is from the January's last print, we can see the highest weight is information technology, XLK, at 33.39%. The next that we can see is the financials at 12.88. After that is the communication services, which is XLC at 11%, and right after that is discretionary at 10.44. Then we've got healthcare at 9.45 and industrials at 8.58. So let's look at the technology sector, XLK. Similar kind of pattern as QQQ. It's kind of already started, the histogram has started bending lower. The signal line has also started curving lower. Early signs of that pullback of 2022 seems to be repeating into 2026. We would be extremely cautious. We can see the percent above the 200 period moving average has also started declining. If this MACD histogram has a bearish cross, the signal line goes below the red line, like it happened in 2022. Prepare for that pullback and look at how far it can go from 152 peak. That's near 97 and climbing, maybe towards 100. It could come back and pull from a correction. So 150 to 100, we're talking about 33% correction right there if that happens. Something for us to be very careful about. And the RSI is also breaking lower in this particular case. The next sector that we're looking at is financials. Similar kind of situation, negative divergence as it climbed to 56, lower high in RSI. MACD is already histogram gone below the zero line, so that's bearish. And the breakdown, like what happened in 2022, to go test that rising 50 period moving average can bring it from 56 to 40. That's also a 30% move. So it's something for us to be very cautious about on financials with all the bullish sentiments about buying financials. The next sector is the communication services. This is where Meta, Google, and so on are. Look how stretched it is. Its RSI is now begin to just to dip below 70. Its MACD has started curving. Like in the financials, the histogram has not gone below the center line yet, but getting very close to cross bearishly below the center line, and the MACD black line going below the red line. Significant warning that the communication services stocks could have a correction. Look at how far it can pull from that 118 level that we saw. It can pull back towards the 78, could climb up towards 80 by the time the pullback happens over the next several months. So that's the possibility of the communication services. Discretionary, this is where Amazon is, this is where Tesla is. Very bearish pattern. We can see that there's this negative divergence, lower high in RSI, as it scaled a higher high from 118 towards 125. MACD is getting ready for a bearish cross. Right here, the signal line red to go bearish below the red line. The histogram is also almost about to cross below the center line and go negative. Again, signs of that negative divergence in RSI, MACD bearish cross. That pullback from 125 can bring it towards 91. Talking about 30 out of 125, little less than 30%, 26, 27% is where that drop could come in. And then the healthcare, which has really done well in the last few months, is now beginning to kind of plateau out. Lower highs in MACD, lower highs in RSI. That could have a drop as well, very much with respect to negative divergence from a longer term perspective on RSI at lower highs and MACD at lower highs. And that 160 level could bring it down to its 50 period moving average at 134, 135 is where this pullback could come. And then industrials, which has been on a tear. If you look at Caterpillar, that's one of the second weighted stock in the Dow Jones after Goldman. Goldman with the top weighted stock in terms of price over 900. Caterpillar's chart has been on a tear. So if you look at where the industrials have climbed, it broke out of a 141 to 111, 30, 141.8 or 142 to 111. Almost like a 31 point added to 142 is 173. It's already there. It's met its target from the breakout that it saw from 111 to 142. 173 has been met. RSI overbought at 79. Look at MACD. Here, MACD has not curved down yet. There is bullish momentum, but in the few months ahead, this could turn back down, and that pullback from 173 could bring it down towards 117 is the rising 50 period moving average. So in summary, while there is great time to celebrate the big reversal that came in cryptos with the crypto market structure bill, maybe there's an immediate upside in cryptos. Potentially this, if you talk about a longer term perspective, a wave one climb from the lows near 3,000 to 69,000, a wave two pullback from there to 16,000. This five kind of sub-wave structure got us to the wave three from 16,000 to 126. Then we got an ABC kind of a move down from 126 to 60. So that's wave four. Wave five is yet to come, and wave five typically is above the wave four peak, which means cryptos can't rule out a new higher high in the months ahead is potentially possible. So we are again reiterating, diversify out of precious metals. Don't chase the gold and silver. Time to be investing into is the digital gold, into the digital, instrument of the choice for the banks and the big markets with US leading in it. Cryptos could be very attractive buys here for a nice upside. The Dow Jones Industrial had a target in 53,400, broke a key milestone at 50. So there's about 3,200 points upside remaining the Dow Jones Industrial. Transports are also looking very bullish. Near-term target is 20,500. But if you look at the longer-term breakout from this rectangle range, that measures to a lot higher, from 11 to 17. You're talking about 6,000 added to 17,900. 23,900 to 24,000 is where transports could climb. So the old economies are roaring back, old economy stocks. This could have significant upside in terms of this index. QQQ is at a similar kind of a rectangle range pattern. However, with the negative divergence, potentially of the double top at 636 seems more likely because of the lower high of RSI as the 636 printed in late January like it had from late October. That breakdown, the double top breakdown, measures from a 580 to 636, 56 points below 580 takes us to 524. However, if the bulls succeed in breaking this above 636, this can go all the way to 692. So right now it's in no man's land. We'll watch what happens. Given that we do look at some longer term signs of QQQ from a monthly chart, A bearish crossover of the RSI, a bearish cross of the MACD, like in 2022, is shaping up, means we are looking more bearish on QQQ. And the downside, not just 524, could go all the way to test, because of how far it is diverged from its 200 period moving average, could go all the way to tested 50 period, which is right now near 423. So that's a significant pullback expected in QQQ. The BPNDX is the bullish breadth of the market is weakening. Lower highs like we saw in 2021 and in the breakdown in 2022. We can see how the NDX chart broke down from its trend line. That breakdown has already happened in the NDX chart from that trend line. So as that breakdown comes and brings lower lows in NDX or QQQ, which is the NASDAQ 100 ETF, the BPNDX could go back to single digits like we saw in 2022, back towards the 6-7 level is possibility for the BPNDX. So this is an early warning sign of QQQ topping out. Software stocks are already shown us what can happen when markets corrects severely. 118 to 17. So 118 was a double top to 79. That sharp pullback came in a span of just 1, 2, 3, 4, 5 months is how quickly that drop came. Something for us to be very cautious that the same thing can repeat with the semiconductor. Look how far it is away from its 50 period, how overbought it is, and that pullback can be just as sharp and furious in the semiconductors. The S&P 500 is also printing kind of a topish pattern like in the 2022. We can see that the MACD histogram has already started to kind of curve lower and take a dip below the zero line. That would be bearish. And this kind of a pullback with the MACD histogram going deeply below the center line could bring down this all the way to its rising 50 period moving average, like what happened in 2022 towards 5110 is where the S&P could pull back to. S&P's signs of a pullback is the ratio of S&P to QQQ, SPY to QQQ. We can see it broke above that declining trend line of the peaks in 2022, and then from there climbed severely. That same pattern is repeating. It broke out from that declining trends of the tops from that 2025, and now we can see it's already climbing to higher highs from what we saw in the August-September timeframe, and that climb is usually a bearish sign like happened in 2022. When a severe market correction comes, S&P 500 being more diversified outperforms technology-heavy NASDAQ 100, so the ratio starts climbing. Ratio climbing doesn't mean the S&P rallies. They're both correct, but the correction on the QQQ is a lot more severe, like we saw with the software stocks. Imagine the weight of the semiconductors when they start pulling back. Semiconductors could easily have a 50% sell-off, much more than what we saw with the software stocks. Something for us to be very careful in the months ahead. If you look at the market weighted sectors, the largest sector is the technology, already looking bearish. RSI has dipped below 70. MACD histogram is about to dip below the zero line. That could mean a pullback from that 152 could bring it towards 97. Maybe it climbs towards 100. But that 33% from 150 to 100 is very likely in the technology sector. The financials are also printing a bearish negative divergence, lower high in RSI as it printed higher in price. MACD has already crossed bearishly. The signal line is below the red line, and the histogram is already below the center, already in the negative region. The histogram is below the center, zero center line. This means financials have downside. That pullback from 56 could come towards 40 is where that rising 50 period moving average is. Communication sector is where Meta and Google are. This could have a severe pullback, getting ready with the RSI about to go below 70, MACD histogram about to dip below in a bearish cross. This can pull back all the way from 118 towards 78 or so is where it's right now. It's 50 period moving average. Discretionaries also bearishly aligned, lower highs in RSI like the financials, negative divergence from 118 as it printed a higher high of 125. RSI was at a lower high. MACD getting ready for a bearish cross. Both the signal line going below the red line and the histogram dipping below zero. We'd be very cautious on the discretionary. This is where Amazon and Teslas are. Those stocks expect them to underperform, and this could Amazon already proved that after the earnings, the way it pulled back. This underperformance could bring it down from 125 to 91 is where its 50 period moving averages. Healthcare has been kind of a laggard, recently rallied, but then still barely made above a higher from 155 to 160. So not a big higher high that it got. RSI is weakening at lower highs. MACD is weakening at lower highs. This could also pull back from that 160 toward the 134 level of its 50-period moving average. And finally, industrials have been roaring higher, however, have met its target, 142 to 111. You're talking about 31 points. Added to 142 is 173, which is exactly where it's at. So it's met its target. RSI is overbought. MACD is overbought. This is ripe for a pullback, and from 173, I'll pull back to 117. Cannot be ruled out. Good luck investing. We'll talk to you next week. Thanks for listening in.
We are not registered investment advisors and encourage our users to consult with their financial advisors before making investment and trading decisions. Nothing contained in our content constitutes a solicitation, recommendation, endorsement, or offer by us at Chartsarefun or any third-party service provider to buy or sell any securities or other financial instruments in this or in any other jurisdiction in which such solicitation or offer would be unlawful under the securities laws of such jurisdiction.